Good evening, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you wrapped up a very good week of trading as well. It was a crazy week of volatility, guys. The price action on the SPY and the QQQs was all over the place, and the volatility was extremely high. Matter of fact, the VIX this morning almost hit 30, peaking at right around 29. Over the course of the week as well, with all the volatility and all the uncertainty, gold went through the absolute ceiling before retracing a bit today. The peak of the day today, around $4,380 per ounce. Now, in terms of the news headlines this week, guys, there were many from different various aspects, right? It all started early off this week with the continuation of the China trade tensions, from everything from critical minerals all the way towards cooking oil. Then midway through the week, we got to hear from Jerome Powell, where he said, yeah, we might just be done selling equities and treasuries back into the market, otherwise known as the runoff of the balance sheet. That may be ending very shortly. Additionally, investors this week were pretty fearful. Yesterday, we were in extreme fear territory. Today, back to fear. Yesterday's price action was quite bloody, of course. The index is taking a big red candle on the Thursday session, and that had to do with this piece of news right there, the First Brands and the Tricolor collapses. Some of the auto lenders, unfortunately, getting very sketchy loans. And as a result, some of the small and regional banks who had, exposure to those loans, they reported earnings yesterday. I'll remind you, this news headline was big, but it was big about a month ago when these companies filed for Chapter 7. Yesterday, the reason that the markets dropped, even though it was old news, matter of fact, we heard about this news on Tuesday from Jamie Dimon himself when JP Morgan reported earnings, themselves reporting a $170 million loss in terms of the exposure towards these two companies. Now, the reason that it happened yesterday was because of the earnings from the banks that had the exposure. They reported earnings and we saw the impact on their balance sheet. And as a result, the entire sector yesterday, the small and medium regional banks here, down a whopping 6.2% on the KRE. So there was so much news this week. And to wrap it all off, guys, you also had so many different company earnings. All the banks, which we covered on the channel, ASML, which we also covered on the channel, and many more today that we will be covering on the channel too, TSMC and American Express. So in today's video, guys, we got a whole bunch of stuff to recap. Obviously, everybody must be confused, maybe as confused as the market's price action as to what's going to happen into next week. Are we bullish? Are we bearish? Should we be buying? Should we be panic selling? All that good stuff. So in today's video, we will seek to clarify most of that. And what we're going to do in terms of the structure is, number one, we'll be going over two corporate earnings that I have prepared for you guys. And those are going to be TSMC, which had earnings yesterday, great earnings, and American Express, which had earnings this morning. Those were also fantastic earnings. So we'll be covering those first. Second, we'll be doing a index rundown. Take a look at the rotation, right? Which sectors are benefiting from some nice gains, which ones are lagging behind, and which sectors are the best possibly to position in moving forward, while we also take a look at the breadth of the market, percentage of stocks above their respective EMAs. Thereafter, we will take a look at our big tech list down here and kind of do the same thing, determine which of these companies are decent in terms of trade opportunities and or possible long-term portfolio opportunities as well. Towards the end of the video, we will be doing everybody's favorite section. Yes, the infamous biggest gainers and losers of the day. We'll be taking a look at some of the companies that have been pulling back a lot this week, and if we can find maybe some trade opportunities buried there within, and also take a look at some of the companies that were performing well today in terms of the rotation and see whether there's some trade opportunities there as well. In terms of our trades over the course of this week, guys, it was a fairly good week, right? In terms of the wheel trades that we had, some assignments that we've been managing as well. So at the very end of the video, I'll be taking you guys through what we did this week in my portfolio and which trades I have on the table for next week as well. So it should be a very fun and action-packed video, guys. Let's jump right into it, shall we? So today, the SPY up 0.57, the Qs up 0.66, and the rotation was quite decent. If you take a look at the heat map right here, not much was left behind today. Yesterday, this entire heat map was a blood red, but today, not too bad. Most of the big tech names performing well, except for Amazon. The banking sector recovering nicely after yesterday's declines. A lot of very bullish price action here on the credit card companies after American Express earnings, which we'll cover in a few short moments. Healthcare sector coming back as well. The bottom half of the market responding to today's price action very decently too. Consumer defensive segment right there performing well, although still lagging behind the S&P 500. And the bottom half of the market, the interest rate sensitive sectors, also not performing too poorly because we have had a nice little uptick on the bonds, a downswing on the yields, and as a result, some of your interest rate sensitive sectors have been enjoying the most recent slide on the yields, especially on the 10 and 20 year. Now, moving on into our relative performance here. One day, not too bad, guys. Almost everything in the green, though you did have some pain in basic materials, utilities, and industrials. A lot of basic materials pulling back. Gold and silver having a big pullback today, but also some of the other precious metals, palladium, a lot of the stuff that's been rallying a ton recently. Just a little bit of a cool-off day, and some other basic materials companies coming down as well. 1 week relative performance, guys. Well, you might expect it to look somewhat different than this, but no, this is actually how we ended the week. So we started off the week, you know, with a nice gap up open from the Friday close, and they actually held gains all across the board. The best performing segment was communication services, but you guys know by now that's largely because of Google and Meta. Shout out to Netflix as well. That's a pretty good, pretty big name in that whole sector. Real estate was actually number 2. Defensives down there as well. Technology towards the bottom end of the list, but still ended green. And financials at the utmost bottom right here, but a decent week in financials despite yesterday's banking concerns, which we'll go over very briefly in a few moments. So before we get into more technical analysis, I figured that I should at least do a quick recap of what happened yesterday since I didn't see you guys yesterday. Apologies, guys. Yesterday again, man, this flu, I'm telling you guys, it's been very hard to kind of get over. I've been trying my best to kind of show up as many nights as I can this week, but when the body tells you that it's tired and it's not the best thing, that's kind of what you have to respect sometimes, right? So my apologies, not too many videos this week. Monday and Tuesday, I was very sick. I gave you guys a video on Wednesday. Yesterday was not feeling good at all, and probably today you can also hear it in my voice. Not 100%, but by next week, we should be back to normal schedule, back to 100%. So my bad for missing yesterday's video, but I will cover what happened yesterday right now. So the big news headline, of course, was surrounding not that one, this one right here. So the First Brands and Tricolor collapses, raising fears of credit stress with Diamond warning of more cockroaches. So this was a news headline that was posted 2 days ago, of course, but the news is not new. It's about a month old where these two companies filed for Chapter 7. But since this week is the week where all the major banks are reporting, well, we want to know what is the damage, of course, right? Well, now we actually have a damage report, and by none other than Moody's, who surveys a lot of the credit in the United States system, right? So here's what they had to say as a result of the whole situation yesterday. Moody's says the banking system, private credit markets are sound despite worries over bad loans. Here's a few things that they had to say. When we dig deeper here and look to see if there's a turn in the credit cycle, which is effectively what the market seems to be focusing on, we can find no evidence, said Moody's. Now, that's what we're seeing today. That could always change, but if we look at the asset quality numbers that we've seen over the last several quarters, we're seeing very little deterioration at all. And that's kind of what Jamie Dimon said on Tuesday during his earnings call as well, when he made the famous cockroach statement. He said, you know, there's a couple cockroaches right now. There may be a couple more, but for the most part, I showed you guys the balance sheets of the major banks, right? The major banks are very well capitalized, but as we saw back in March of 2023, sometimes the small and medium regional banks, they take some shady deals and they're not as well capitalized as the bigger banks, and some of them go under in the process, whether they're small and regional banks or whether they're just, you know, standalone lenders as these guys were, First Brands and Tricolor, right? Moving on further into this article, with respect to GDP growth, we're doing much better than many people thought just 6 months ago. So again, the credit conditions, looking at GDP growth as well as an expected decline in interest rates, we feel the credit quality is in a pretty good place today and potentially may improve, which does reiterate the statements made by all the major banks this week, whether you look at JP Morgan, Bank of America, Wells Fargo, Citigroup, and even an investment bank such as Goldman Sachs, they all said the same thing, right? Even though there could be some players here and there that are not as well capitalized as the main institutions. Is there something rotten in the financial system right now? Well, by large and by far, the answer is no. But of course, this is going to be an ongoing story and something to look out for. And in the introduction, I mentioned that this week was very volatile and that people were very fearful. So before we do our earnings, I figured I should give you guys a quick recap while all the other YouTubers are posting their it's over thumbnails, right? Or they post something like it's starting with a massive arrow like this, right? No. Here, we're going to be very logical as we always are on the channel, right? So we're going to go over the narratives right now and the tailwinds as well, just as a quick reminder in terms of the price action right now, why we might have the juice to potentially move lower, but not exponentially lower. As some people are saying, we might be going into a huge market crash. I don't personally think so, but I do think there are some ingredients that could lead to some short-term healthy downside pullbacks, right? And those are these narratives right here, the bearish narratives that are at play right now. You have the AI bubble and the fact that the market is somewhat overvalued in terms of a forward priced earnings. You're at a 24. Everybody's showing the chart that the market's never been this overbought on a forward price to earnings ratio. Only back in 2000 and 2001 was it this overbought. Well, back then it was actually a lot more overbought. But what everybody doesn't mention as well is the fact that, of course, nowadays we have 35-40% of the S&P 500 in these profitable companies right here, which is why the average price to earnings ratio is a lot higher than it was maybe 10 years ago, 20 years ago, 30 years ago. If you guys haven't seen this video, I figured I should pull it up, right? I should have probably pulled it up before the video, but you can look at the top stock market companies from years prior, right? So top stock market companies by market cap in the world by year. I should have probably done this earlier, but hey, I'll do it with you guys right now. There's a cool little video right here. Not this one right here, where you can go back in time, right? And see in the 1980s, what style of company was leading in the S&P 500 and what their average price to earnings ratio was. If it's a bunch of banks and a bunch of oil companies at 10, 15 PE, well, obviously that's going to bring down the average PE of the index, right? You can go to 1980, you can go to 1988. You got some Japanese companies here, but just focus on the US ones that are in the mix right here. 1990, sorry, a bunch of Japanese companies again. 1992, you can see the type of companies here. ExxonMobil, Altria, which is a tobacco company, of course, Walmart, GE, AT&T, a bunch of non-exciting companies, Merck, Coca-Cola. And then you move further into the 1990s, more GE. Finally, you got Microsoft up there, Royal Dutch Shell, Exxon, Intel, exciting company back then, right? Coca-Cola, Merck, Walmart's making its way up there. And as you can see, as we move on the years here into the early 2000s, you still don't even really have big tech, except for Microsoft, of course, more GE, Exxon, Walmart. None of these companies, guys, having crazy price to earnings ratios at the time, right? If you move on a little bit further here to the late 2000s, right? 2009, 2010, now you're starting to see some familiar names, right? Apple's up there, Microsoft's up there, Exxon's still number one. Moving on further to the mid 2000s, now you see the shift, right? Apple, Exxon still up there. Microsoft, here's Google. There's Berkshire Hathaway, General Electric, Johnson & Johnson. What an exciting company that is, right? Walmart, Wells Fargo actually down there as well. And now as we move further and further, right, now you start to see some of the big tech legacy players and their high PE multiples starting to really impact the market. So this market demographic that we're currently in is relatively new. So if you're using stale data and saying, well, the SPY is currently currently the highest that it's been, and you're comparing it against other events, right? All the way back to the 1980s, of course, you're missing a bit of context. You got to take this with a bit of a grain of salt. Other people reference the Shiller PE ratio, which is the more accurate one to use if you're using anything of that nature, or the Buffett indicator, which is also a very stale indicator in my humble opinion too. Number two, the government shutdown, of course. The longer it lasts, the more volatile the markets can possibly be. Number three, jobs creation, keyword creation, is softening because the labor market is still relatively resilient. It's a no hiring, no firing economy right now. Number four, China tensions and the tariffs. That's brand new since last Friday, but it does add a little bit of a piece to the bearish narrative puzzle. It's just something that they can use as a catalyst or a pretext to send us down, and nobody would ask any questions because it's there. And now number five, the new corporate credit / bankruptcies that you have to look out for, similar as what we had back in March of 2023. So do they have some ingredients in the event that something pops up? Can they possibly justify some further drawdowns? Well, the answer is absolutely yes, right? It's not as if none of this was here, right? And then they would send the markets down and everybody would be like, why? That's not even possible. There's nothing happening right now, right? No. So you have ingredients for a narrative, but at the end of the day, the market does move in a long-term horizon with fundamentals, right? So that being said, what are your bullish tailwinds for the market? Number one, strong GDP. Yes, about 0.4% of the GDP number was because of the AI boost, but still, you got to count it, right? You can't just exclude stuff Very strong GDP. Even if you were to remove AI, it's still very strong. Low unemployment, 4.3%. That is historically low for any market. Low-ish inflation, though sticky at 3%. The headline numbers are sticky at 3%, but you guys know trueflation is arguably a better metric for inflation that's in the economy right now, and we can see it's at 2.21%. This is 15 million products refreshed on a daily basis by SKU, arguably a lot more accurate than your CPI or your PCE, which is a restricted basket of goods, of course. Moving on further, strong earnings. We've been covering them all week, right? Strong profits, banks are good, and the consumer credit quality is good as well. I'll show you guys American Express earnings too. Then you also have the AI megatrend, of course, which kind of comes to offset the AI bubble narrative, but still, the AI megatrend and the spend is strong. We heard from ASML. You're going to hear from TSMC in this video today as well. And then lastly, don't forget this one. Everybody tends to forget this one, right? This is a big tailwind. 2025 and 2026 and there beyond, right? $4 trillion in personal and commercial tax cuts as well. So these will support the markets if we do get the pullbacks, right? Eventually, when the short-term narratives wear off, what's going to happen is your bullish tailwinds are going to kind of take over. So no, we're not trying to predict whether the market's going to go higher from here, lower from here. I'm just telling you guys, if it does move lower from here, which is everybody's concern right now, we could just be looking for very casual, either weekly higher lows, monthly higher lows at the same time, since the markets haven't really pulled back at all very much, right, for more than a couple days at a time in the last 6 months. Eventually, you do get your average monthly consolidation. But if you want to know if it's healthy or not, you have to understand, do we have bullish tailwinds or bearish tailwinds? For the most part, they are still bullish. As a result, these should still be buy the dip opportunities. So if we do get more pullbacks and more sell-offs, I am still a bull in the market, but not because I'm drinking the AI bubble Kool-Aid. Definitely not. No, because we understand that there are bullish macro tailwinds still at play. If the data changes, obviously we will change our tune, but that is how I will enjoy positioning into the foreseeable future. So that's a quick little recap on where we stand in the markets right now. Hopefully you enjoyed that. Now, let's dive into 2 corporate earnings, shall we? We're going to start it off with a very good one. TSMC reporting earnings yesterday, but sadly, the share price did a whole lot of nothing. And I was kind of warning about this on Wednesday, saying, you know what, TSMC guys, from the last base of support right here leading into these earnings, the company was up like 35%. So you can't ask exponentially more from them, can you? Even if they did report really good earnings, because maybe a lot of that earnings bullishness was kind of already priced in. That being said, the earnings were absolutely fantastic. 8.5% beat on EPS and a nice 0.83% beat on revenue and huge increases in profits. Let's have a look, shall we? The easy numbers for TSMC, well, they beat, as I said, on everything, but they raised guidance as well. Q4 sales, $32.8 billion versus the estimate on guidance of 32. And in terms of earnings before interest and taxes, 16.4. This is a huge beat on profitability metrics, guys. Massive. Take a look at some of the easy numbers right here. Revenue year over year, 41%, just something light, 41%. 3 nanometer revenue for some of their high performance compute chips, 62% year over year. Big revenue driver for the company, of course. Operating margin continues to move higher and higher and higher. Very strong. Operating income up 50% year over year. This was an absolutely staggering number when I saw it as well. And EPS 51%. So yes, they're driving a lot of revenue, but they're becoming even more profitable in the process. Your bottom line margins this quarter, guys, 45.7% net margins. That is better than 42.7% recorded in Q2. This is the best margins TSM has ever had as a company. Phenomenal net margins by them. Let's take a look at the article, shall we? TSMC profit surges 39% to beat estimates and hit yet another record on AI chip demand. Let's look into it real quick. Recent developments in the AI market continue to be very positive, said the TSMC CEO, C.C. Wei. Increasing adoption of AI models by consumers has led to more demand for compute and, by extension, semiconductor products. The company had raised its 2025 revenue growth forecast to the mid-30% range. Prior, last quarter, they said it would be about 30%. So raising the guide, as we were saying previously. TSMC also increased its expected floor for capacity expansion and upgrades to $40 billion for the full year, up from a previous floor of $38 billion. And when you take a look at the earnings call, when they were asked, well, why are you guys raising CapEx, right? Well, because they need to. There's just too much demand, so they have to build out further and further and further. All of TSM's partners are, let's just say the demand is through the roof right now. Further comments from the CEO. AI demand actually continues to be very strong, more strong than we thought 3 months ago, which is crazy because 3 months ago, the CEO was already saying it was through the absolute roof. So now I guess it's beyond the roof, going towards the sky, very strong. And I know I'm kind of speaking in hyperbole right now, but still, it just goes to show, guys, that they're not spending money for expansion if they wouldn't have to. It's because there is real demand. And the demand for them is pretty much locked in all the way through the end of 2026. So it's not something short term as in the next 1 to 2 quarters. No, it really is pretty much for the next 5 to 6 quarters even. We are also happy to see a continuous strong outlook from our customers, he added. In addition, we directly receive very strong signals from our customers requesting the capacity to support their business. Thus, our conviction in the AI megatrend is strengthening, not weakening. And this comes at a key moment when people are concerned about the AI bubble, right? How sustainable is it? Is there going to be still cash over the next few quarters? Are the hyperscalers going to continue to spend? Is NVIDIA going to continue to ramp up as much as they are? Is AMD? Is Intel? The answer, if you take a look at what ASML said 2 days ago and what TSMC is saying today, the answer unequivocally right now is indeed yes. Take a look at some of the numbers right here just to highlight some of their profitability, guys. It was insane. Look at these gross margins, right? Prior, they've been hitting record gross margins a few times this year, but this year is, this most recent quarter is the best one so far, 59.5%. The guidance prior was about 56.5%. So they crushed their guidance in terms of gross profit. Last quarter was 58.6. The quarter before that, 57.8. So consistent increase in profitability here. Operating margin, their guidance was 46.5, 50.6. That is nuts, guys. Last quarter was 49.6, and net profit margins, you can see that beautiful number right there, 45.7. Very strong numbers by TSMC. So of course, you got the nanometer breakdown right now. As the chips get smaller and smaller, the smaller the chip, the higher the performance right now that TSMC can utilize it for, right? Some of the bigger chips are used in smartphones, other things of that nature, but you can see as they get smaller and smaller tech, they start phasing out the older tech. So more and more revenue now being driven by those infamous 3 nanometer chips, which are in the new NVIDIA and AMD cards, of course. Third quarter revenue by platform. This one is very big, guys, because obviously you have your high performance compute segment, which is the data center segment of the business, right? You can see the growth rate by platform here, quarter over quarter, measuring in relation to last quarter. HPC didn't grow because it's already growing at like mid 30%. So there's no improvement there. It's still as strong as it was last quarter, basically like 35%, right? That being said, what is upticking right now is everything else. And this is a segment of the market that people have been waiting for. You remember the past few quarters, we've been talking about the semiconductor companies that have been left behind on semi, certain divisions of Micron as well, Texas Instruments, Qualcomm, all of those companies that are more focused on these 3 elements of semiconductors, smartphones, Internet of Things, and automotive. Well, those numbers are now seeing upticks in order from TSMC. So that might be an indication that maybe some of these companies, Qualcomm, TXN, onsemi, MCHP, the more consumer-focused semiconductor players out there, maybe it might just be their time to shine as well over the next coming quarter. So pay attention to that. That's the takeaway from that slide right there. But overall, guys, extremely solid quarter from TSMC. Nothing bad to say whatsoever. Don't want to reiterate the same things too much. That being said, the age-old question, is TSMC a buy-up here at $295 per share in weekly overbought conditions at arguably the top end of a very strong 35-37% move? Good question. Let's take a look at some of the numbers, shall we? In terms of your forward price to earnings at $295, you're looking at a forward PE of 28.61 for the end of 2026. You guys will see me using end 2026 numbers now because 2025 is almost done. We can kind of take for granted the end of 2025 EPS. So now we look to next year to confirm whether or not the growth metrics are still solid. The PEG ratio, 1.68 through 2028. That is actually not too bad in relation to especially other companies that trade well above a 2 PEG. At 1.7, it's not terrible, but a free cash flow yield of about 1.84 is not the best. But once again, you're not buying this one necessarily for the free cash flow yield just yet. You would be buying it for the revenue and EPS expansion, two things that should be going very, very well for the company over the next few years. Take a look at the EPS curve right here. Very strong here, guys. They're going to go up like 60% over the next, well, from this year through 2028, right? So for the next 3-4 years. And revenue, look at this revenue ramp here. Absolutely ridiculous in the next 4 years as well. So TSMC should still be having some very good quarters and very good years ahead of it. And it is not that expensive. TSMC is a nibble. And I've been very clear about this on the channel, even prior to earnings. Here, it was a very decent buy. Down here, it was a screaming buy. Up here, it remains somewhat of a nibble for me. Obviously, if we retrace a little bit down here, it kind of, just come back maybe to the 12 EMA, something around like 270, 260 on any further market weakness. Wait for the 12 EMA to catch up. Then it would become a bit more of a bit of a better buy, let's just say. It's not a bad buy up here if you're buying it for the long term. For some short-term swing trades, it might just be a little bit stretched. But if you get some better price action, some better value down here, you might even find me adding some long-term shares to my long-term portfolio for TSMC, something that I have not done since back here. So very strong earnings, solid company, extremely solid profitability, and one of the key players in the semiconductor process, especially for data centers and really, honestly, for everything, right? Their moat, their competitive advantages are arguably second to none. And I've always said it, guys, if you can get over the China-Taiwan tensions, which is obviously the black cloud overhang, which is one of the reasons why some people just don't want to invest in the company. If you can get over that, this is one of the best semiconductor plays in the entire market, bar none, if you're just looking at it in terms of a base of fundamentals, being that it's still relatively cheap, and also the fact that it's critical to the entire production process of most of your favorite semiconductor companies out there. That's everything for TSMC earnings, guys. Hopefully you enjoyed that. Now, let's switch gears a little bit and move on to American Express. American Express having phenomenal earnings today, and the share price did reflect that, up 7.27% over the course of the day. Super strong and almost a brand new all-time high for the company. So let's take a look at some of the numbers real quick. Beat on EPS by 3.61% and beat on revenue by about 2%. Why are they up 7%? Well, they increased guidance and they kind of kill a little bit of the fears around some of the consumer concerns that people might have had surrounding these credit card players, right? They said, listen, our consumers are doing very well, but once again, we do understand that American Express caters to a more affluent customer. That's for sure, but it also makes them a more resilient business in the face of any economic, I wouldn't call it a downturn, but any economic hiccups or things of that nature, which is why they've held up so well, even though average consumer discretionary spending hasn't been the best. The affluent consumer discretionary spending has been very good, and that, of course, is what American Express caters to. That being said, let's take a look at some of the easy numbers. Revenue up 11% year over year, net income up 16% year over year. American Express having one of its better net margin quarters versus historical averages, 15.7% net margins, very strong quarter for them. Bill business up 9%, and the credit loss provisions, you might remember me talking about this with the banks. If these go up notably, the company is somewhat fearful that people may just not be paying back their loans on time or at all. If they are reducing the loss provisions, it means no, they're confident in their consumers' ability to pay back their loans. And as a result, they are setting less money aside for the people who either are late or just don't pay at all. So let's move into some of the American Express earnings, and we'll just dive directly into their slides because their slides do a good job of painting the whole picture. So here's the guidance raise, 9 to 10%, which is really good and a nice raise on EPS. I'll take you guys through that. It's at the end of the earnings slides all the way down. No, I just went too far there. There you go. So it used to be 8 to 10. Now it's 9 to 10, and EPS from 15 to 15.50, now 15.20. So raising the bottom end of that, which is very, very, very strong numbers from American Express. Additionally, refreshed U.S. consumer and business platinum cards, and that went extremely well for the business. New Amex travel app, a new partnership with Toast, launch Amex ads as well, which could be a very nice revenue driver for the company. Now in 160 million merchant locations, and those locations have increased 5x since 2017, and they were ranked the #1 issuer and #1 in the rewards and annual fee category by J.D. Power in 2025. And I do agree, as an American Express cardholder myself, they do have probably the best rewards system in the game. So you have another few highlights here from the US Platinum Refresh, which was a big revenue driver for the company because you know those Platinum cards have some pretty steep annual fees, but they also have some really good rewards. Look at this, $530 billion in franchise annual billing. So people really making the most of those Platinum cards right there. New account acquisitions versus the pre-refresh, 2 times more. So the Platinum Refresh is going really well for them right now. Record high bookings on Amex Travel and 5x the daily average consumer Platinum accounts linking, which is very, very, very solid right there. So really strong performance from that Platinum Refresh. It was a big revenue driver, as I said prior. If you take a look here, net income, as we said, up 16%. That was the highlight for the company. Very strong margins overall. Total billed business remains very strong, 8% growth right there. US specific consumer service billed business, 9%, one of their best quarters over the course of the last year, of course. Commercial services billed business, also not the highest for them, but still 4%, which was really good. International, a division where American Express has done really well over the past 2-3 years, guys. They did a really big marketing push internationally, and it is working. 13% year over year, which is very strong too. Transaction growth, 10%, nothing to see there. New acquisitions, 3.2 million new cards over the course of the quarter, which was another very solid quarter for them too. And 64% of those accounts opened by millennials and Gen Z. They did a very big marketing push from 2021, 2022 towards that new demographic, and it has been paying off tremendously for them. Total loans and card member receivables, it's currently sitting at about 8%, so not bad, right? Billed business and total loans and card member receivables, 7%, very strong too. Credit metrics, something that everybody should be paying big attention to in this market environment. 30 plus days past due, 1.3%, which is standard, in line with the last 4 quarters, and net write-off rates also very in line with the last 5 quarters as well, down from last quarter and the quarter prior, back to kind of what we saw in 2024. So, is the credit quality of the average American Express user a problem for the business? The answer categorically should indeed be no. As a matter of fact, this is better than some of the ones we saw from JP Morgan and Bank of America just the other day. As a result, total provision for credit losses has now been dropped on a quarter-over-quarter basis, still currently standing at about $1.3 billion. So very strong, guys. Nothing bad to say at all. You got some more graphs here on net card fees overall going higher, and their net interest income, which is a big revenue driver for the company, obviously, right? $4.5 billion right there. So all in all, guys, extremely solid quarter for American Express. And the last one, what do they do with all that free cash flow? Well, of course, they pay some nice dividends to shareholders, but also buy back a tremendous amount of shares. Over the course of this quarter, $2.3 billion repurchased in terms of shares. Very, very strong. Nothing bad to say about this earnings report. It was a very solid earnings report. And last but not least, of course, you have to have management's commentary on the health of the consumer. So here's what the CEO had to say. I think the health of our consumer is really good. And they're spending, they're engaging with the product, and they're paying their bills. We're still in a relatively stable environment. Our card base is not representative of what's going on across the United States. It is truly a bifurcated economy, which is what I've been saying on the channel many times. It's a K-shaped economy, right? We have a small percentage of the cards, meaning in relation to like the total network cards, Visa, MasterCard, and them, but our card holders are much more premium. Speaking on the government shutdown, we haven't really seen any impact at this particular point in time. Here's what the CFO had to say. It's very stable across the board, very strong, talking about consumer health, right? There continues to be uncertainty in the environment, but the portfolio shows no weakness after detailed scrutiny. Moving on, that's pretty much it, guys, in terms of everything, right? They give some insights in terms of, where people are spending. As you can see right here, retail spending was up 12%. So basically on your odds and ends, right, in terms of just goods. Restaurants was up 9, airlines was up 5, but with a penchant for premium front of cabin, which was up 14%. Overall, very good. International was up 13 as well. So very strong, very, very, very strong, right? I don't see anything, here's what the CFO had to say, or the CEO, I don't see anything that would indicate the billings are going to slow down or decline. And we hope that that continues into the fourth quarter, which is also why they raised their guidance. So very strong earnings from American Express. Very strong company, very profitable company. The only difference between them and MasterCard and Visa, well, other than the fact that they cater to a more premium client, is the fact that, of course, American Express owns its own debt. It is its own bank, whereas Visa and MasterCard are only networks. The debt is held by the banks. When you have a MasterCard and a Visa, you must notice that it says JP Morgan, MasterCard, or Visa. The debt is held with the banks, and Visa and MasterCard only collect the fees, which is why Visa and MasterCard are more profitable companies. But for a company that owns its own debt, it's doing really good here at improving its margins over time, as we just saw. And in terms of your forward expectations for EPS growth, very solid for the next few years, and revenue very solid as well. So let's take a look at exactly where we stand. As you can see, the analyst estimates here don't have that much further upside for the price. But what does the valuation have to say? At $345 right now, you're currently trading at a 2026 forward PE of just under 20, a forward PEG ratio of 1.53, and a beautiful free cash flow yield of 5.04%. Now, the last time that I was, well, not recommending, because I can't recommend anything on this channel, right? But the last time I was saying that I was buying American Express was down here at 300. At 350, you are going to see me have a bit of pause on this one. I won't be picking up any more shares. Not that it's not decently valued for starting a position and maybe building into it through any weakness that we could have in the market in the upcoming weeks or months, but just the fact that I'm full, right? I've been building my American Express position for a long time, and pretty much at these levels is where I stop. So very strong company, but at this point in time, American Express remains a hold for me. If you were considering adding this one to your portfolio as a new position, well, the best method would probably still be the dollar cost average method, as right now the price, I wouldn't say the price is stretched, but we are kind of away from the 12 EMA. So my sweet spot would be in the event that we somehow find American Express at one point retesting its monthly 12 EMA. That is probably where I would like to add, possibly down here in the lower 300s for me personally. So that's everything we had for our two earnings. Whoa, there's way too much on the screen right now. My bad. Okay, let's just erase one of those. Now, let's dive into the technical analysis portion of the video, shall we? So in terms of the price action on the S&P, guys, it's very, very, very choppy, of course, right? A whole bunch of volatility over the course of the week. You can establish something like this, something like a tightening wedge, right? And whichever way it breaks, pretty much, well, you get completion to the other side. It sounds easy because it is. Just wait for the price action to tell you where the market wants to go, essentially, right? If you get a break to the downside and you start flushing these lows right here, 652.79, that is your first daily downtrend in the last 5-6 months since those April lows. No daily downtrends have been established since, so in the event that that does happen, it has to be notable to you, right? It's a price action shift that we haven't had for a long time, and as a result, you would be coming down here to the 12 weekly EMA, which would be about 650 down to about 645. The bulls on the weekly, though, a long way away from losing this trend, of course. Beautiful weekly uptrend so far. And if you move a little bit lower, well, you got a lot of space. Anything above 635 is still looking for a weekly higher low. And I'll remind you as well, in the event that things get a bit more painful and you get a couple weeks of this stuff into big tech earnings, right? Well, just keep in mind the monthly bulls have an absolute ton of space. So any longer duration pullbacks or AKA sell-offs or AKA corrections should still be buying opportunities as the bulls control the higher time frames still, and as long as the overall macro, meaning the bullish tailwinds that we talked about earlier, right? As long as those are still good, well, then we can still adopt a bullish bias stance. Moving on to the QQQs right now, same concept, very, very, very choppy price action here, guys. All across the board, daily lows are set right now at about 589. Of course, if you crack that to the downside, you are going for the first daily downtrend of its kind. Obviously, still in the last 5 months at this point in time, your support level, short-term support is this one down here, right? The one that we were just into on Monday and the Tuesday session and the last Friday session, a 595 down to 590. It's a small one, but it is there, right? If you break lower, you're coming down here to the 12 EMA. The next line of defense, 582 down to about 575, 7-point range, prior resistance highs right there. And in the event you even break through that one, well, just keep in mind that is going to be your monthly retracement, which would be very healthy, right? 6, almost 7 months if you include the entire April rally. 7 months in a row, not many major monthly pullbacks, testing the 12 as it tried to do several times over the past couple of years. Well, you're just going to head for a very casual monthly higher low, and that would not be the worst thing. If anything, it would free up some tremendous buying opportunities on some of our favorite high-quality companies with phenomenal fundamentals. That being said, moving on to the QQQs, right? I mean, the XLF right now. XLF took a big bath yesterday, of course, right? All across the board. But the banks, the major banks had good earnings, and now American Express had good earnings as well. I'm expecting good earnings from Visa and MasterCard. Some of the insurance players, though, have been lagging behind, but that might be a segment of the market which could provide some opportunities here over the next few weeks and months. Keep in mind, XLF right now, well, sadly, this sector isn't a daily downtrend, and it has been for a long time, right? Call it about a month and a half since the highs of September. That being said, we are into support right now. 52 down about 50 is going to be your support range. That is big prior resistance on the monthly timeframes. And this one, after 5-6 months of upside, let's call it, they're going for the monthly retracement. So when I talk about retracements on the monthlies on the SPY and the QQQ, just use XLF as the perfect thing, what you might expect from the rest of the market, right? It's just healthy consolidation, while a lot of these companies still have very strong fundamentals, so keep that in mind. Nice backtest area, though, for some possible swing trade long. Some of my favorite companies in that segment of the market. Visa, still one of my favorite bets down here, guys. 340, 330, very strong company right there. Berkshire could be very interesting as well for selling some short puts into the 480 region down there, as we're just trying to reset the monthly timeframes progressively on Berkshire overall. And some of the banks, right? Some of the banks could be some decent swing trade opportunities off any further consolidation towards their 12 EMAs after such phenomenal earnings. My favorite two banks would be JP Morgan and Goldman Sachs. Off of such monthly consolidation, they need to pull back a little bit more. And if they do pull back a little bit more, guys, I probably will be waiting with a little bit of swing trade action. Moving on to XLV Healthcare, not too bad, but still an inside week for healthcare, meaning in relation to Friday's highs and then Tuesday's lows, right? We haven't really done much of anything, yeah? So keep that in mind when we're looking at this chart in terms of resistance, 148 down to 145. The bulls still are unable to crack through. And the entire time that we're in this kind of daily consolidation phase, you just have to understand what's going on here, right? It's just weekly consolidation for this market. Looking very strong. The bulls do control the weekly timeframes right now. If you get any further consolidation, I would expect a back test down here. Call it like 140, 139. The pocket of, well, these guys as well, those resistance highs. And some of the weekly moving averages could be a nice location for the bulls to accumulate a bit more momentum before trying at the resistance level once more. That's in the event that they don't just try to do it from right here, right? Healthcare is still looking very strong. The best area to position, of course, as I said many times on the channel, was down there. This is not a bad area. It's just not the most optimal area. But if you have a longer term view on healthcare, I still do think that this is one of the more undervalued aspects of the market right now. Moving on to semiconductors right now. So semiconductors, very strong, holding near the highs and refusing to lose the infamous daily 12 EMA, which is your short-term momentum gauge right now. That being said, right, we can possibly move higher, but it's going to take your market leader, right? It's going to take NVIDIA. You really are going to need NVIDIA to start breaking and cracking above to some new highs, in my opinion, if you want to see the SMH really expand. If that doesn't happen and the semiconductor index continues going into some declines and we lose the 12 and go back to Friday's lows into a daily downturn, is that the worst thing? No. Would it look so awkward to see the SMH pull back for some weekly consolidation and maybe come back and tag the 12 EMA, which is done, many times during the context of very nice bull runs? No, it wouldn't look so awkward at all. As a matter of fact, I would be expecting that if these weekly overbought conditions aren't able to be sustained in the short term, and you get more market weakness from any one of the bearish narratives that we have ongoing right now. This, of course, is your lead bull in the markets. And if we lose him, well, that's what's going to bring down the SPY and the QQQ as well. Moving on to the Russell right now, the Russell got washed yesterday because a big component of the Russell is financials, right? Those small and medium regional banks. That being said, price action on the daily is all over the place, right? The daily lows are set down there. Try to push above to a high, trying to look for a higher low and keep on pushing. But if the bears are just too strong into next week, you might be heading into a bit of weekly consolidation at that point. I wouldn't mind exploring some Russell trades down here, 230 down to 227, which would just be a very nice back test of prior 2021 highs and prior resistance highs from here as well. And also some of your key moving averages down there. You'd also be looking for a bit of a monthly higher low. So you can see a common theme here, right? The bears have the narratives right now if they really want to go for the extended consolidation. And also the weekly and monthly timeframes, it wouldn't look so awkward if we do get that consolidation. You'd just be looking for some higher lows. They got to print the higher lows eventually, guys. It can't just be, 12 or 15 or 20 monthly green candles in a row, despite that is what some people would want to believe, right? If they do go for consolidation, it would be healthy. So hopefully you guys are identifying some sectors of the market or some names that you might want to play if that turns out to be the case. Moving on to the VIX right now. So the VIX pre-market this morning peaked at almost 29 and then really came down hard, but still, in the grand scheme of where we were just a few weeks ago for a couple of months, right? The VIX is pretty high right now. So you guys know when I was saying down here was a time to be buying leaps on certain companies that had been left behind when the volatility was low. Now, not the most opportune moment for long sided options, right? Because they're paying more as a volatility premium. But for selling options, selling covered calls against things that have ran a ton, or selling puts under the market, volatility is really great, especially in terms of giving you some really good distance on those strike prices. So keep that in mind. Yields right now remain a bit of a mixed bag, right? Push and pull, but the trend is your friend still. 10-year yield, nice weekly downtrend, and the 20-year yield, still a very nice weekly downtrend as well. The next areas to break for these on the 20 will be the 4.5, a very strong level since last year, October 2024 on the 20. And for the 10, it's going to be down here around 3.91, still unable to really crack and hold below the infamous 4% line on the 10-year, which means your bonds are still somewhat stuck, but they're starting, right? You can clearly see a nice weekly uptrend forming right now, finally clearly above our weekly EMAs, which is something that we haven't been able to say since last fall. So finally some bullish price action coming in resistance though right here about 93 down about 91 where we are right now. Smash through that, and the next target, my profit target for a lot of my call options on my bond trades, is going to be up here in the high 90s to $100 range. Moving on further to everybody's, new favorite asset, because nobody wanted gold here. Not many people were talking about gold here, although we were talking about it. But now everybody wants gold, right? What's happening with gold? I promised you guys we would touch a bit more upon it in today's video. Well, is it just retail FOMO? Is it the fact that people think that the world is collapsing and recession is imminent? Or might it just be central banks heavily positioning? Well, it's central banks heavily positioning, guys. This is big money, right? Very big money right now. You can see from this chart right here, central bank positioning is very strong, but it did not start a month ago or 2 months ago. No, it started back here in early 2024 and has been maintained ever since. And this is an estimate right here in terms of the reserve build that the central banks are trying to do. Now, a few key reasons behind this. Well, of course, it has to do with the quote unquote end of U.S. exceptionalism as it relates to earlier this year because of the tariffs and maybe the distrust in the U.S. dollar and distrust in the debt level that the U.S. is currently having. Or it might just be overall diversification, right? Away from U.S. denominated treasury bonds over to gold. Obviously, several countries are doing that right now. Russia being a big one, China being another big one, several other Asian companies, and also other members of BRICS as well have been leading the charge in terms of purchasing a lot of gold for central banking reserves. The only problem is you don't really know when they're going to stop or what the pace of those purchases is, of course, right? So in terms of price targets, a lot of people have been throwing around price targets, 5,000, 6,000, 8,000, 10,000. Let's just be honest here, guys. Nobody knows, and you do not know the timeline as well. But what you do know is the trend is your friend. And as of right now, it is still a very bullish uptrend. But keep in mind, you're very overbought. You're overbought on the 3-month time frame, which is a very long duration time frame. Last time I got this overbought was 1979, and then that earlier run after the recession in 2008, not during the recession, because during the recession, you can clearly see gold went down. So if you think that gold is going to protect you from a recession, it never has. Gold is an asset, just like everything. In times of recessions, people just sell assets categorically across the board, right? But what gold usually does is it front runs the end of the recession, and it comes out of the recession very strong, arguably stronger than equities for the initial phase of the rally back. So keep that in mind, guys. Gold is not the perfect recession hedge, but right now it's acting very bullishly because of the central bank positioning, of course, so the big boy trade, right? Currently peaking at 93 on the monthly RSI, which tends to be, at least when you go back in history, and luckily for us, we have a lot of historical context for this one. Last time it peaked up here, right? Every time, well, you can't even see it on the chart back there, but it tends to mark a local top in the market. It doesn't mean it can't keep going, but it does mean that you might be due for either from sideways consolidation, just like we had after this move right there, sideways consolidation, and wait for the 12 EMA to catch up. You remember when it peaked here and I was saying either gold's going to correct to the 12 or wait for the 12 to catch up? Here it waited for the 12 to catch up. So maybe we can plateau and wait for the 12 to catch up again. It doesn't mean that gold has to absolutely fall off a cliff. I'm not calling for that, right? Weekly time frame also very overbought, 85 RSI, and the daily just peaked today almost at 90 before giving a very big, retracement candle to the downside. So, we'll be expecting maybe a further possible slide on gold, just correcting some of the lower time frames in terms of price action, but looking very strong, extremely tough to position, guys. If you don't have a very long-term time horizon on gold, very tough to position. I know some people are just going all in on gold right now, and if that is you, I wish you the absolute best, but it is not me, although I do have some gold in my portfolio. Not even portfolio, I have physical gold. I have like 4 troy ounces of gold coins that I bought a long time ago. That's the only position on gold that I do have. Moving on to Bitcoin right now. So Bitcoin up yesterday was actually down 1.6. I mean, Friday was down 1.6. I mean, not the worst day for Bitcoin, but still a down day. Daily downtrend is now clear as day, in my opinion. Coming in as support right now, 107 down to 99, a very big location for Bitcoin. Prior resistance, prior support again, and we'll see if the bulls can defend it one more time. The clearest time frame for me, because now it's getting very choppy, even on the weekly, right? Lack of a trend. I mean, they tried to go for it, rejected again. The best time frame, in my opinion, guys, is the monthly. So you remember that infamous monthly consolidation that we talked about earlier for the indexes? Bitcoin has been doing it now for the past couple of months. Sideways with a bearish lean, but monthly consolidation nevertheless. The 12 EMA is at the bottom end of here at about 99, and you can see that's usually been a final resting point for the bulls the entire duration of this bull market rally so far. So I am going to be continuously accumulating Bitcoin in the lower 100 range, both using short puts under the market, but also just accumulating some long positions overall. Ethereum, a bit of a poor week for Ethereum as well, right? Not quite a daily downtrend like Bitcoin, but not looking super strong. That being said, we are into support right now, 4,000 out of 3,700. The weekly time frame is all over the place too, but it is a weekly downtrend currently, which means you are still in monthly consolidation. Monthly cup and handle is in play, but they can retrace harder. You guys saw them come all the way down here at 34.50 just the other week, right? If you lose this support, you're going to the second one down here where the 12 monthly EMA is 32. I know some people don't want to believe that can happen, but it can, and we would still be in a very nice monthly move. So for accumulation for Ethereum positions, some here, maybe save some of the bag for down here as well. Just leave the door open for that possibility. Moving now into our big tech list. Now, moving first on to Apple. Apple up almost 2% today, man. You guys know why? Look at this stuff. Apple's iPhone Air sells out in minutes across China. Apple's been having really strong numbers for their iPhone 17. If I can find you the other article right here, where is it? The pre-orders are on fire. The phone is sold out everywhere with big lead times for more, meaning like 3-4 weeks on back order if you want to kind of get these. Globally, the iPhone 17 has been doing excessively well. Let me just try to find you the article. This one right here, right? iPhone 17 demand surges globally. So very strong here. Lead times have surged 80%, pre-orders up 5-10% year over year. Very, very strong release by Apple, that iPhone 17. So phenomenal job for them. That's been really upholding their share price and was a big contributing factor into them gaining this level in the first place overall. Price action still remains a little bit mixed, of course, because of what we had this week, but the bulls aren't looking too bad, right? We know we lost this little wedge right here, came down for the flush. They never set the daily downtrend in motion, though. So overall, during this leg of daily consolidation, not a downtrend, but consolidation, well, we were always looking for a weekly higher low. That being said, the bulls are not out of the woods just yet. If the overall markets continue with a bearish lean into next week, you could possibly expect Apple to lose the levels despite its bullish iPhone 17 release. And at that point, you might just be coming down to a key area of support, which would be kind of like the mid 230s for a casual back test, maybe prior to earnings. Apple's stock right now is looking very strong, but it is a little bit frothy right now at about 252. I haven't done the valuation, my apologies, but if you want me to do it right now, right, at 250, we did it after earnings last time. If you want me to redo it here, 250 for end of the year, right? At 250 by 730 right now, it's just too expensive right now. It's mid 30s, so 34.2 in terms of the price to earnings, which is not terrible, but it is rich. But then again, they're not growing EPS that fast, right? So it's a 3.26 peg. It's your most expensive Mag 7 names across the board. Moving on to AMD right now. AMD, strong week for AMD, despite everything that happened, right? Closing near the highs, not at the highs, but close. So obviously the bulls are in full control of this trend right now, yeah? Very strong, and the daily higher lows are set at these guys down here, 213. So you're looking for new daily higher lows, possibly in the quest of just price expansion. In the event that you roll over and break this to the downside and go for weekly consolidation, the bulls are working with a ridiculous amount of space right now, right? Key area would be all the way down here, 150. I mean, we were commenting on AMD being a really good buy down here, possibly, right? For the expansion, we got it. Congratulations. But now at 234, it's a little bit rich, even for swing trade purposes, unless you push your timeline for a trade thesis deep into 2026 or early 2027, then you can kind of make the numbers make sense. At around 210, it was around a 1.8 peg. So not the most expensive, but also not as fairly priced as it was back there at about 150, 160. So keep that in mind. No further positions for me on AMD. I already have all the AMD that I want. So that is my take on the matter. Moving on to Amazon right now. Amazon down 0.67% into our second level of support down here, 213 down to 206. Amazon just losing the levels, right? Losing the weekly uptrend, which means we're in monthly consolidation for Amazon right now. Very healthy monthly consolidation, coming right down to the 12 EMA, which is something that the bulls have often used in the context of bull market. So I will continue to accumulate Amazon shares at these levels because Amazon, guys, has really lagged behind the market a lot, right? It's still down year to date, almost 3%. And that is in spite of having really good revenue and EPS growth for the next few years. Still strong margins in all lines of businesses moving at full steam right now. Very strong fundamentals. This is arguably one of my favorite plays in big tech right now. All of your analyst price targets well above the current share price right now. Super bullish EPS expansion the next 4 years. And super bullish revenue expansion, guys. By 2028, Amazon is almost going to be making $1 trillion in revenue, which is just nuts. So I want to be making the most of this monthly consolidation before we possibly get the next leg higher, at which point we won't be able to play Amazon anymore. So I am doing leaps, I'm doing shares here, and I'm also having a nice time selling some short puts. Moving on to Google right now. Google up 0.76, closing near the all-time highs, but not quite. Strong price action, though. It was a daily downtrend, right? Then the bulls have a nice engulfing move. If you get consolidation, you will look to establish a new higher low and go for the new daily uptrend. Overall, though, weekly consolidation, you can see, is pretty much almost towards the end. Weekly higher lows are down here, 236.35. So the bulls are looking good. Didn't quite come down and pick us up at the 12 EMA. Next target for possible expansion, guys, you got to go with kind of round numbers. 275, 300 maybe, but Google is looking really strong. It is a little bit overbought still on the weeklies. In terms of fundamentals, though, right? Is it a sell? Probably not. It's only trading at about 26 forward price to earnings for the end of the year and a 1.73 peg, which is really okay for a big tech stock, especially Google out there. It's not that expensive overall. Moving on to Meta, which is another one of my probably favorite buys in the market right now across the big tech landscape. Coming into support, 706 down about 680. Really choppy price action. But what you can see here is a nice weekly downtrend, which just means similar to Amazon, we are just in very healthy monthly consolidation. They have to do it at some point, right? You can't just rip higher and higher and higher and higher away from the 12 EMA. The healthier move is when you rip higher, you come down, test the 12, another leg, come down, test the 12, right? The market moves in waves. So this is just a very nice and casual down wave in the markets right now. As a result, I am buying some Meta down here, and the valuation of Meta around 710 is also not the worst. It's high 20s price to earnings, right around a 2 peg. So it's not the cheapest name in big tech, but the profit margins are really good for this company, and the growth prospects are also very strong as well. Look at this EPS move by Meta over the next 4 years, and look at the revenue move by the company as well. Very, very strong numbers for Meta over the next couple of years. So I do want to be making the most of this consolidation, especially coming down into a nice support area prior to their earnings. Moving on to Microsoft right now. This one has not moved in literally a month. Right? It just hasn't done anything. So price action is very muted. So kind of trendless right now on Microsoft on the daily, but also on the weekly, right? You can argue that maybe the bulls are just trying to accumulate, go for the bull breakout, just like this sideways bull flag of accumulation. And that might be true, but Microsoft is probably going to move in the direction of the markets, meaning if the SPY and QQQ come down 3, 4, 5% and complete their weekly drawdowns, well, Microsoft may just do the same thing and go for a retest of these lows down here, 491. If the SPY and QQQ are bullish, well, you might just get the Microsoft breakout. Suffice to say, it's not doing much of anything on its own right now, and it does have earnings coming up in about 2 weeks' time. The monthly timeframes are also very muted, but Microsoft too has just been doing the good old monthly consolidation. More sideways than down, that's for sure, but monthly consolidation nevertheless. Above 500, the stock is, in my opinion, a little bit rich right now. It's one of the more rich companies out there. Microsoft never really gets cheap just because of how consistent it is, but we were able to find it a lot of times last year for under a 2 peg and under a 30 price to earnings multiple. And if we do get a bit of a pullback here after earnings or because of the market or because of both, and I can find it down here like 470, it might be another area where I could consider Microsoft again. Moving on to Netflix. Netflix, still like Microsoft, guys. This area right here since August, 2 months. It's moved higher, it's moved lower, but once again, we're back between 1215 and 1185. This infamous 30-point range. It's just like a magnet for Netflix stock. My opinion, Netflix is not going to do anything before they have their earnings next Tuesday, so please keep that in mind. Depending on what happens after their earnings, right? We're either going to get the very nice weekly uptrend breakout, or you're going to get the weekly downtrend breakdown. And what might test down here around the 1100 mark, I'm fine either way. I have a lot of Netflix shares, but in the event you give me the full monthly retrace down to the 12 EMA, around $1,000 or under, that is where I'll be buying Netflix a bit more heavily, excuse me. And around the $1,200 range, the stock is still a little bit expensive. Moving on to NVIDIA right now. NVIDIA, 0.78% to the upside. It's just been glued to this prior resistance range, which is now acting as key support for the bulls. Have not lost it all week. They've been challenging it and challenging it and challenging it, unable to break 180. So very nice move by the bulls right now. You did lose the daily uptrend, right? And now you're kind of trendless. You're not in a downtrend. That would need this, right? But you're also not in an uptrend anymore. So keep that in mind. You're kind of trendless, but the higher time frames kind of point to what is going on right here. Just very healthy weekly consolidation. So my favorite way of playing NVIDIA right now, one of two things, right? Either you're going for the weekly trend recapture and further breakout using call debit spreads or shares or however you guys like taking swing trades, or you're doing what I like to do, which is on volatile red days, selling puts down here. With the increase in the VIX, you can get some really good distance on those short puts down here at 170, which is arguably the larger area of support down there on the weekly, and also some of your previous monthly lows. So NVIDIA is not looking too bad. It's still a bit monthly overbought right now at around 175. The PEG ratio is pretty good, around a 1.71. So NVIDIA is not one of the most expensive stocks in the market right now. So it is probably still one of my favorite plays for short puts, or even for some attempts at some swing trade longs for here up to the crack of maybe 200, just because the price action is still looking quite solid. Moving on to Tesla right now. Tesla up 2.46%, but in my opinion, it probably also won't move just like Netflix until their earnings, right? So Tesla has been barcoding for about a month right now. It's gone higher, it's gone lower, but for the most part, still stuck in this range of price action. Below support is 405 down to 380. I won't be positioning much before earnings. Then again, I don't really position before any company's earnings, so it's nothing against Tesla. What's happening right now, there was a clear bull flag, right? Really nice expansion, consolidation around the top of this move. So the bulls are looking to retain control. And in the event that earnings is a mishap for the company, you got a very nice support area down there. In the event we make our way down here after earnings, you might find me looking for some swing trade entries. We will see what happens. Moving on to Palantir right now. Palantir up about 0.02%. So Palantir as well, right? For the last month has been doing absolutely nothing. It's gone lower, it's gone higher, but still stuck in this range. Trendless right now at the top, right? So the bulls just consolidating sideways, building a bit of an accumulation zone. It looks like a bull flag, right? But once again, this one's going to be predicated on the direction of the markets. If the SPY and QQQ start losing levels in a big way, well, obviously Palantir is going to start losing the levels as well. And if SPY and QQQ go well, obviously Palantir is going to start gaining the levels too. But you guys have noticed something, right? In the last month, there's a lot of these names that haven't really done anything. So the market hasn't been the best in the past month. I mean, certain pockets of the market have been very good, but even the SPY, right? In the last month, not much of anything. And that's largely because a lot of the tech names, the legacy big tech names, haven't really been moving. I guess they're all waiting for earnings. Palantir might just be doing the same, although their earnings are going to be the first week of November. Moving on to SOFI right now. So, on Palantir, no positions for me, guys, right? The risk reward here at the all-time highs is not the best for me. But with an increase in the VIX, if we get big red days for some which reason in the market, if I can find some short puts down here under 150, you might just see me playing a little bit of Palantir on the wheel. Moving on to SOFI right now. SOFI, very volatile stock in the markets indeed. Down 5% yesterday. A little bit of a red day today as well. Keep an eye though, guys. 25.86. You lose that, unfortunately, it's a new downtrend. They had the downtrend back here. The bulls engulfed. They were looking for the follow through, but then you got the China news, and now you might just be losing this trend as well. That time frame is confusing. If you just look to the weeklies though, guys, it's just weekly consolidation, volatile weekly consolidation, but weekly consolidation nevertheless. And at the same time as well, maybe a little bit of monthly consolidation too. The level that I like playing SOFI off of right now is 24 down to 22. I've been having a lot of fun selling some puts down here. It's been a very lucrative endeavor as the distance that we can get is very good, and they never really came to pick us up down there. Not that I would mind. That would be the next area that I'd be looking for some SOFI swing trades as well. Come down to there, you might find me picking up either some form of call options, whether debit spreads or maybe leaps, looking for the next leg higher on SOFI. But for now, I will wait for their earnings, which are going to come up in about 2 weeks' time. Moving on to Uber right now. Uber down about 0.24%, testing our area of support right now. 93 down about $90 is the infamous area of support. Daily downtrend in the process, and as a result, weekly consolidation, right? So very hotly contested area for Uber right now. If they crack through it and test the weekly higher lows at 89, well, you're just going to be looking for monthly consolidation too. And I've been saying it, guys, right? I've been waiting for this move on Uber a little bit after noticing them fail the $100 range. Maybe we need to accumulate a bit lower, closer to the 12 EMA and closer to a bigger area, which arguably is like the mid 80s. Like all of these guys, all of that price action. Keep in mind though, Uber at $90, it's not a bad buy for a long-term portfolio, not at all. The valuation is still very fair in my opinion, but they have earnings in like 2 weeks time, right? So I might just be waiting for earnings to further position in Uber. I think they should have good earnings, but you guys know the drill, right? Even though a company can have good earnings, it can still go down depending on the prevailing sentiment in the market at that time right now. So Uber, not looking terrible. One might argue that it could be a nice swing trade opportunity long with a stop loss below here and a take profit there. And I would agree because their weekly bulls are in full control of this chart still, right? But the markets are very choppy right now. So keep that in mind, right? Swing trades are not as easy as they were just about a month or two ago. And lastly, good old TSM, which we covered earlier when we covered their earnings, right? TSM price action, kind of all over the place. It looks a little bit like the SMH right now. Very wide levels right now. The top of earnings from yesterday and the lows of last Friday at about 280. So The trend is still intact. It is still a daily uptrend looking for a daily higher low, anything above 280, looking for a new higher low to possibly go for continuation. But if you unwind too much of this and get the daily downtrend in motion, just understand, as I was saying earlier, what's going to happen, right? Just looking for very casual weekly consolidation. It doesn't mean it has to do this. It can just be very soft and methodical and just wait for the 12 EMA to kind of catch up to the price as it kind of did right there without deterioration of the fundamentals or anything of that nature. I do believe TSM will still be buys on these weekly consolidation phases that we can see in the stock price. And that is everything for your overall stock market rundown. So hopefully you guys enjoyed that. Now, let's dive into everybody's favorite section, which is the biggest gainers and losers of the day. I'll spend like 10 minutes on this one maximum. I know I'll always say that, and then I do like half an hour, but no, I'll actually spend about 10 minutes, and we'll do more next week. Okay, so before I go for these charts, guys, you will notice a lot of common weekly and monthly charts. So I'm about to run through these, right? We know that a lot of these names that are red today had ridiculous rallies over the course of the past month, and a lot of their weekly and monthly timeframes are looking the same. And my favorite tool for making the most of some of these declines after highs is not just buying anywhere. No, it's selling puts under the market. If you like these names, they're not for everybody, but if you like playing these names, well, maybe you can make the best case or the best use of the high VIX right now and sell some puts at some prices that you may want to acquire a bit more of these companies. So let's take a look at HIMS right now. So HIMS yesterday had some really good, or 2 days ago, had some really positive news surrounding the release of their new menopause drugs, essentially, that they'll be adding on the website, right? 16% rally from the stock, and in true HIMS fashion, every time we get nice rallies, you get really nice declines as well. We've given back the entire move again. I know it's very frustrating to be a HIMS shareholder. Every time you want to break out of that infamous 65 area, sorry, I got something in my eye, something happens either on HIMS directly or in the market, and it just pulls back immediately. Now, HIMS, the valuation of HIMS is not that bad, right? I like it around 40, but it doesn't come down there too often. But look at this monthly time frame. It's just been so choppy, right? My favorite way of playing this one is selling short puts down there at the 40 or mid 40 strike. And if I get a sign, I would not mind. The valuation down there is quite manageable in terms of price to sales. The company is not, unanimously loved by everybody, but the price action is very choppy, right? That being said, short puts on this one, I'm a big fan of playing just because of the volatility alone. Moving on to other companies like SoundHound, right? So I wanted you guys to pay special attention to some of these charts that'll be forming, right? SoundHound, same thing. You can find some really good premiums down here around the $15 range for a pullback. What I'll be looking for a lot of these names that I'm about to name here are pullbacks to weekly 12 EMAs, the medium-term momentum indicator, right? Which, in the context of bull markets of stocks with very high momentum, tends to be respected a lot. So I'll be looking for pullbacks, not looking to buy them right away at the daily pullback levels, because we know there is still a bit of a bearish overhang in the market right now, especially on some of these high-flying growth names out there. So that's how I'll be doing it. Oscar Health, I'm still a fan of playing as well. If we come back down here into support 18 out of 17, nice support area, right? Rejection from here. I sold my calls at the top. Lucky me, I guess, right? That being said, the weekly uptrend is still intact. Come down here. I'll be selling some puts down here again with the increases in the volatility. And if the price somehow gets down here again, you will find me doing call options again, because it's just been a massive range, right? At the top and at the bottom, right? With some middle action, of course. But that's how I will be playing HIMS overall. NBIS, look, finally got the engulfing move on NBIS, right? Break of the daily 12 EMA on this one, something that has not happened since the Microsoft deal. So keep that in mind. The price action has shifted and you have lost the daily uptrend. That has not happened, guys, in over like a month and a half. It should be notable to you. So if weekly consolidation happens, where are we possibly going? Maybe the the weekly 12 EMA, excuse me. If you are interested in buying NBIS under 100 in 100 share lot increments, well, you can take the better advantage of the VIX right now and the high volatility on this stock specifically, 91 IV, right? Look at these put options down here in the 90s. they are still very, very, very much attractive around that 12 EMA. Just something to pay attention to and look out for as we cool down these weekly timeframes. I will not sit here and say, yeah, this is exactly where we're going to stop and we're going to reverse for sure. I'm not going to sit here and say, yeah, this is a great time to buy. No, I'm just playing the volatility on these names overall. Still a very decent name for a long-term hold. Not that overvalued in my humble opinion, but still looking to make the most of this pullback, just playing the distance and the volatility. SMR, same concept, right? Huge move up, followed by a huge move down, back down here to support 44, down about 40. Same concept, right? If I'm looking to play the big volatility in SMR, well, now I can probably find some strike prices in the low 30s. Of course, these companies will need power for all the data centers, but keep in mind SMR and Oklo are two companies that don't have any revenue. And arguably, you're not even sure the scale they'll be able to achieve in 2028. Oklo has the exact same chart. It's ran an absolute ton. So although, yes, the bulls are still in control, I'm not going to sit here and say, yeah, buy and just keep going for the swing trade longs, right? No, this weekly candle is not that inspiring. And eventually, it does oftentimes pull back close to or at exactly the 12 EMA, right? So if we're looking to play some big volatility, you can find some ridiculous strike prices on Oklo, right? This is what's good about the VIX, man, is that you can play some of these very volatile names if you want to. You don't have to, but look at the distance you can get on some of these Oklo puts. I'm not saying you have to go super close, right? Even 140s, you can argue is close. It's about like 10, 12%, 15% away by next week. But this stock can move 15% in a day, right? Look how low you can get. This is just ridiculous. You can go all the way down here for next Friday and get a 120 strike. You can even get a 116 strike, and it still makes sense for premium if you're looking for just 0.5%. That is the benefit of volatility, guys. You can target these levels and still get a decent amount of ROI. That being said, some of you are more greedy than that, so just take, those trading cues for whatever you want them to be, right? Oracle coming down here a little bit, 6.93, but no defined action for me, guys. We covered them after earnings. Oracle is still, in my opinion, richly valued, right? It's not my favorite play. Is it a solid company? Yes. Do they have a lot of money in the pipeline? Yes. Is OpenAI going to be able to actually pay them $300 billion? Who knows? They don't even have $300 billion right now, right? That being said, it's a 2.6 peg. There's many other companies that we showed you in big tech that are trading for well under a 2.6 peg, so Oracle is not my favorite bet. If anything, I might be interested if you give me a bit more of the earnings gap fill down here at 250, but for now, it's a pass for me. ASTS, same concept, right? Solid company in terms of what they're doing, but look at this weekly candle, right? Weekly overbought conditions, it's ran an absolute ton. A lot of these names are going to start looking the same with a bit of a bearish leaning bias in the markets, pulling back a substantial amount. ASTS, same concept. You can get some ridiculous strikes. It's 83. It's 83 in the market right now, right? Look on ASTS how low you can actually get with the heightened VIX. You can go all the way down here. You don't need to be too greedy and play these strikes super close to the market. If you want to do that, it's up to you. It's your money, not mine, right? But if I'm just looking to play the casual 0.5% rule, I can go all the way down here to 65 and get decent premium. It's a 7 delta. You have 7% chances of that happening, right? And 65 is down here, closer to the 12 EMA type of thing, right? So I don't know, just an idea, just how I'm playing these. APLD, same concept as well, right? Big pullback from the top. I'm not saying next week it can't just skyrocket like this, but when you find some nice big red days like this, and you can kind of see momentum might just be getting a little bit tired. Let's be honest, after 6 weeks of ridiculous price action, a 3x in 6 weeks, right? How much more do you actually want? This stock pulls back to the 12 EMA a ton. Maybe this time is different. I don't know. But in the event that it isn't, and I want to get some distance on my short puts and still make some money, right? Well, I can go all the way down here and I can play the 26 fives. I can play the 26s. I can even play the $25 short puts for a strike price. And where is that? Well, that's right in line with the 12 EMA. Funny how that works, right? So that's the type of trade that I'm looking to do. I'm not looking to call this as local bottom and say, ooh, look, finally a nice red day so I can just buy more call options up here at a high VIX. No, this might be more extended consolidation. It can happen. Since we don't know whether or not it's going to happen, I'd rather just play the volatility. But hey, that's just me. Symbiotic, same concept. Look at these candles. Pull back to the 12. I'm not going to show you the options chain. You guys know the drill by now. 50 for me would be a nice area. Vistra is a company that I actually like. Vistra, Duke Energy, Nextera Energy. I like these companies a lot. They've ran, of course, but if we get some pullbacks on these further pullbacks, I might be a big fan of positioning a bit for some swing trades in a 2026 type of thing, because at the end of the day, these data centers need energy. And, you know, if you don't want to play the speculative modular reactor companies that have no revenues whatsoever, well, maybe you want to play the companies that actually have the infrastructure and who actually have some of the contracts with these companies now, such as VST, such as Duke Energy, such as, you know, even this company right here. This is not a utilities player, but this is a nuclear energy provider, one with actual revenues. On a pullback with some volatility could be somewhat interesting. We can find it down there. So just some ideas that I'm trying to throw in the mix when I only have 10 minutes to kind of do this stuff, right? Critical minerals, bros, got destroyed. Everybody positioned late after the China news, going for more gains, going for super greedy gains, now pulling back. MP materials, not for me, guys, honestly. It's ran an absolute ton, right? The company is very richly valued, let's just say it that way, in relation to how much money they'll be able to pull out of the ground, literally, right, over the next couple of years. I mean, don't take it from me, take it from the company's own statements, right? $1 billion in 2028. Company's trading for a $14 billion cap. That's 14 price to sales on a minerals company. Industry average for those is like 2. So it's trading well above industry peers, with good reason, of course. Now, some of the other plays, USAR, look at this one, really came off hard off the tops. I had some people ask me either by email or DM or in my Discord even, shout out to you guys, can we buy USAR up here? We were buying it down here, guys, right? There's a time to do these things, and that time was not now, but shout out to USAR. Good volatility, short puts down there if you want, but keep in mind, company statement the other day said, yeah, we were looking to get some contracts from the US government. We haven't really heard back from them just yet. Same thing with quadruple U's as well, right? Big pullbacks on this one too. Everybody went really hard on this one, a bit late into the price action. If you got trapped, well, now you know buying things at the highs at the hype of a narrative might not be the best proposition. It's good for intraday trading, but if you want to do the weekly holds and you're late, guys, sometimes it's just better to recognize, listen, I'm late. I missed it. I missed it. Just wait for the next narrative. They come around all the time, right? So you missed it. You missed it. It is what it is. Too high for me right now, all things considered. Moving on to other names. CoreWeave for me would be some short puts down here around 110. You can get some good volatility just looking for the weekly back test. If you fail this resistance, looking for support, 120s down to about 110, that whole region there, decent level overall. And I think that's pretty much it. I mean, there's more plays, of course, but I can't cover everything, right? Moving on to the names to the upside. American Express, we covered already, of course. Estee Lauder, not really interested. You guys know me. I'm an e.l.f. beauty guy myself. Taking a look at, Fiserv, I think it's still dead money until their earnings 2 weeks from now, right? But worthy mention. For the second time, they're trying to curl around the MACD on the weekly. It's been dead, man, for so long. Big weekly oversold conditions. And finally, actually down into our support range, 2020, 2021, 2023, decent area. I think this is where the bulls are actually going to play defense right now. And the valuation of the company down here is really attractive. Probably one of my favorite recovery story plays in fintech, because we know in fintech, there are many recovery stories. There's this one, there's good old PayPal, there's Square, of course. Fiserv arguably might just be my favorite. So keep that in mind if you're looking for something down there. Other than that, which ones do I want to talk about? Airbnb. I mean, this one was on the top 5 options list, of course. Airbnb, phenomenal company, in my opinion, down here, guys, around the 120 mark. Clear opportunity for some either longer term shares or some short puts. My favorite way of trading in the market. The reason I'm referencing short puts and everything like that, guys, is because the trend is not so clear anymore. There's battling narratives right now. So that's when I kind of taper back my directional swing trades and I play the volatility. When the VIX is high, I just play the volatility. When the VIX is low, that's when you see me taking some more targeted swing trades, like some longs on certain things, right? The reason today I'm bringing up only the way to play these with volatility is because it's a high volatility environment, right? So you got to choose the proper tools for the proper job at hand right now, in my humble opinion. And I think that's it, guys. I mean, we'll do more of these. We covered a lot of them during the regular trading, during the regular market breakdown, like Visa and MasterCard, that they were good opportunities. Shout out to New Holdings as well. New Holdings, if for some which reason we make it back to 14. You guys know me. I'll probably be looking to load up maybe some swing trades, some short puts, and some shares for long-term company expansion. They've been doing a good job of consolidating. Mercado Libre as well. Shout out to them, right? They've just been getting crushed recently. This whole area, phenomenal area to be building some share positions as well. Looking for the good old monthly retracement right now into the 26. 26 is kind of like the final resting place for Mercado Libre when it does consolidate on the monthly timeframes. In a bull market, looking very good, and the valuation down here is extremely attractive as well. So just some ideas that are kind of out there and how to play the volatility on a lot of these names. But that's it for me, guys, in terms of the biggest gainers and losers. Hopefully it gives you an idea of how I'm playing this market on some of these companies with good distance on my strikes. Speaking of my own trades, if you take a look here at the recap of the weekly segment, you'll notice that a lot of these plays, they were the top 5 from Sunday's video, right? I post the top 5 plays. Here are the top 5 of this week. I post them every week there. So here were the top 5 options plays. Amazon, Affirm, SOFI, NVIDIA, Airbnb, and a lot of the bonus plays as well. I played almost every single one of them. So shout out to you guys. If you watched last Sunday's video, you probably got a lot of these trades as well. SOFI, phenomenal trades all week. Then we had BMNR, which was a really nice position as well. SOXL, easy. That was in the bonus section as well. HIMS, good volatility. We played the 35. Can you imagine last Friday? We got the 35 short puts on HIMS. I did another batch, but I'll show you those in just a few moments. Airbnb, top 5 options plays, the 115 deep into support. Nice trade there. NVIDIA, top 5 options plays, exactly the strikes we were looking for. And Affirm, this is not the correct strike price. It's actually a 65. I should probably fix that right now. Actually, excuse me, a 68. I don't know if I'm gonna get a sign on Affirm or not, because it ended under 68, but then in the post market it was actually above 68. So weird things might happen. I guess I'll have to let you guys know on Monday if I get assigned or not, because you guys know the drill, right? If it goes above, somebody can just cancel their exercise. A long put holder can cancel their exercise, and in that case, I won't get the shares. If I do, though, I'll be very happy to run some covered calls. Speaking about my current positions, here is going to be the account. So let's just blow up the positions real quick, and you'll see not much has changed. We closed a lot of the wheel positions already. The current assignments that we're running, Amazon, BITX, Rocket Mortgage, and Sentinel One were assigned at various levels. If you want to know the average cost basis on those, well, the BITX trade, we got assigned at 52. We've been running some really juicy covered calls, and our average cost right now is 45.71. Today, on the big BITX drop, I did a DCA attempt, another short put at 40, and we got $1.95 for October 31st. Very strong premium there. Amazon was one that we got assigned a few weeks ago at 222.50. As you can see, I've been rolling my covered calls and got a phenomenal one earlier this week into the week of earnings. Average cost on Amazon now is 209.86. So we've been farming the hell out of premiums right there. Rocket Mortgage farming as well. 18 was the initial entry, and now we have an average cost of 17.25 after premiums being farmed. And Sentinel One, we got assigned last week at 17.5 and have been running covered calls. Now our average cost is down to 16.80. Those trades are as follows. Amazon, we're just looking to make the most, obviously, of this level of consolidation, as we were saying, farming premium in the process. BITX is just Bitcoin, right? So now my average cost is right around here, right around where we are, which is a current price on Bitcoin of around 106. My DCA attempt order is under 100,000, which would be around 40 on BITX down there. Another nice support area, so keep that in mind. Rocket Mortgage, my first entry, as I was saying on the channel, is here. Second entry will be here for some DCAs. And Sentinel One, I just want to play the heck out of this 2-3 area range down here, which is roughly 17 down to about 14 bucks. I wouldn't mind adding a few more contracts down there in the event that the market gives me the opportunity. Those are some of the assignments we've been running. In terms of long call options, Sentinel One's now back to break even. I might just add a few contracts there. TLT, we're actually positive on TLT right now. Running well, but my take profit is around 90, high 90s. Visa, this contract also is right around break even right now. We bought it right around here, honestly, right? When the stock was around 340. I want to say somewhere back here. And now it's the same thing, but we're just looking for the same pattern. We're looking for expansion, right? So keep that in mind on that Visa call option. It hasn't really moved for us. Up, down, sideways, backwards. XLV, we're still running a nice profit on those. My first take profit target for XLV will be the resistance range, which is right above us, which is going to be this guy right here. 148 is TP1. Take profit number 2 for me will be the crack of the all-time highs. I still have a lot of time on those call options. January 2027. Then we have a bunch of short put orders. As I said, Affirm, I don't know if I'm going to get assigned. I'll know tomorrow morning. We covered the covered calls. Amazon covered calls, obviously. BITX covered those. We covered my DCA attempt at 40, of course. BMNR, this one expired today, so it's worthless. HIMS, I have a contract for next week. $40 short put. We got 20 cents for them after today's big decline. Good distance on some HIMS. Once again, putting my money where my mouth is, telling you guys where I want to play, and that's exactly where I'm playing. Iris Energy, this is one trade. You can see I have the 47 puts, I got them yesterday. 58 cents we got them for yesterday. This is exactly what I was saying when I was running through the biggest gainers and losers of the week, right? Look at Iris Energy, super extended on the weekly RSI. I'm looking for the pullback, and I'm looking for the weekly 12 EMA to kind of catch up. There's some really good distance on this. By next Friday, this one has to drop 22.5%. You may not think that's possible. Well, it might not be possible, but if it's not possible, then I'll just get to collect all that premium in my pocket, won't I? And if I do get assigned on those shares, well, I'll be buying it on a very nice retracement from 74 down to 47. And you might just be looking for maybe a bit more follow through thereafter. It's not that crazy valued at 47. That's the last area where I kind of draw the line on valuation. Up here, it's a little bit rich for me, but we'll see. If we lose some of the price action here and consolidate a bit more and they pick me up, I would not be the unhappiest camper. Let's just say that. Rocket Mortgage, we covered already. Resolve, we got assigned 100 shares of Resolve, $500 at $5. We'll see what happens there. We got some crazy premium for those. Our cost basis is $440 right now. Resolve is just a meme play for me at this point in time, kind of like Open Door was. Sentinel One, we covered already. SOFI, we covered already too, but I do have a new contract. Next week, 22 short puts. We got them for 15 cents over the course of the morning today. And then we have the long leap call debit spreads, right? We got the AMDs still powering through right there. We got the Amazons still doing okay. I guess we're still up on them, but they've given back a lot of profit over the course of the decline from 240 to where we are right now. CoreWeave, this one's still holding up nicely, 50% gains. Fiserv, this was an earnings play from last quarter. It's been zero for a long time, but finally it'll be removed as a tax loss from the portfolio. Lost $135. Big deal. JP Morgan and Meta are my two new directional swing trades. JP Morgan took this one after earnings, looking for expansion to 315, 320. We'll see if it happens or not. Meta looking for some expansion through earnings. Both of these contracts have a January expiry. We paid $1.96 on JP Morgan, and we paid roughly around there on Meta as well. Total profit is $5, of course, so keep that in mind. NVIDIA, this one's been a swing trade since last earnings. It's holding, it's roughly par, but the take profit for me will be around $200. I'm still keeping it. November expiry on that one. Rubrik, the Leap contract is now back to break even, unfortunately, but Rubrik is one of my favorite plays, man, in cybersecurity right now. Great growth prospects, in my opinion. Nice area down here for some short puts. Call it 70 to around 65. Great area for either shares, short puts, and that'll be my DCA area for another Leap call option, looking for monthly consolidation. Nice monthly uptrend, monthly consolidation into the good old support zone, possibly due for leg number 3, I guess, right? 1, 2, 3, into 2026 or maybe late Q4, something like that. So I got to put a lot of time on these contracts. Then we have the small resolve call debit spreads, 6 versus 11 for Maze. These are like it's a throwaway trade, $350 cost and a $2,500 profit potential. So it's a lotto, right? And finally, an SPGI swing trade, which you took a few weeks ago at this point in time, around the same area, but the volatility is a bit higher right now. The price is incrementally lower. We took it a little bit higher. It's currently a little bit lower, but essentially what we're going for here is reaction from this whole support area and an upswing into the profit target, which would be here. And we have all the way until, until January, I believe, for that to actually occur. Yeah, January, 510, 520 bull call debit spread, paid $360 for it. Maximum profit potential, of course, is the width of the spread, $10, but we'll close it before that. That is everything, guys, but I have a whole bunch of buying power. You might see a lot of positions here, but a lot of them are disappearing. And we have some assignments, but I showed you the average costs on them. They're all very, very solid positions on which I'm not down any money. We've forfeited some profits, but we're not down any money so far. So we just going to need to wait for Amazon to come back up and take us out of the trade. We need to wait for BITX to come back up. But the whole time that they're down here, I'm farming so much premium, so those trades will be very juicy when called away. Account's doing good. We have tons of buying power for any further declines in the indexes. I have not overcommitted. I have a lot of dry powder right now, which is the exact perfect position that I want to be in leading into this, somewhat bearish leaning week, or maybe weeks that we could possibly have ahead of us, right? Or if the markets keep ripping higher, well, you see all the long biased positions that I have currently with a ton of time on the contracts. That is everything for today's video, guys. Hopefully you did enjoy. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We'd love to have you back. We do these every Monday to Friday after the close when I'm in good health. Next week, there will be 5 videos. I promise you guys, feeling a lot better than even yesterday or Wednesday or Tuesday or Monday. And lastly, but not least, if you have any questions, guys, feel free to comment down below. I always love answering your questions. I'll get to all of them over the course of the weekend. And lastly, but not least, in the event that you wanted to join a trading and investing community of over 300 members, such as yourself, whereby we trade the markets every day, but also build very solid long-term portfolios and maximize our tax-advantaged portfolios as well, you might consider joining our trading community. In that community, you get access to a lot of things. Namely, you get access to all of my trades in real time, all of the wheel trades, all the leap call trades, and everything in between, right? The directional trades, everything. Here are all my trades over the course of the past few months. The green check marks are wins. The red little circles are losses. I like to keep my losses small, and obviously the wins more frequent and big, of course. That's the name of the game in trading. Here's just a lot of the trades that we've made over the course of the past few months. And you also get access to our private morning live streams Monday through Friday, where I stream for 2-3 hours at the open and trade live, but also answer all your questions on your stocks, your options, and your long-term portfolios. It's the best place to interact with me one-on-one. If you had any questions, whatever they may be, you can also ask me those questions in our chat rooms, and I'm very fast to answer all throughout the day. You also get access to our private education section, where I go over everything: technical analysis, fundamental analysis, all my option strategies, how to build trading portfolios, how to build long-term portfolios, so many educational videos in that segment, and our members find tremendous value in there. And last but not least, another little bonus, you also get access to all of my charts. Whenever you guys see these charts with support, resistance levels, earnings breakdowns, you get to copy paste all of them. All of my watch lists, all my charts, it takes 15 seconds. Those are just a lot of the things that you get as part of the Discord membership. And if you're interested in any of that, the link to the Discord to join us is down below in the video description. So hopefully get to see some of you guys in there shortly. Would love to have you in there with us. And if not, I will see you right back here on the channel. That's it for me. Have a beautiful upcoming weekend, guys. I will see you on Sunday for the good old top 5 options list, right? Take care. That's it for me. Peace.